Struggling with prop firms? Let's go. In this video, I'm going to show and tell you that how you actually would know that if your strategy works, and how basically when I'm refining my strategy, how I came about my strategy, and what is the actual way that if you know that your strategy is actually going to work, or is it just going to let you down in the real markets. So basically, let me start with the number one without wasting time. So I already marked out these zones here, right? We're going to be using gold for the example, as you can see over here. And basically, how I like to start off always is if my strategy really works. And what I'm going to do is, let me just bring myself in as well so you can actually see. Okay, I'll put myself to the side here. That if my strategy actually works, I should be able to pick out, and this is what I like to do as well, a random date throughout the year. Could be any date, and is it still profitable on that particular day? That's one way, right? Whether it be throughout the months, whether it be on, even try on a just before Christmas, a little bit after New Year, on the bank holiday, and just randomly pick out different days. And what you can even do is just close your eyes, scroll to the left side, keep scrolling to the left, pick up a random date, and just start back testing on that particular day. Now trust me, right? Rather than back testing every single day, and what happened with me was the strategy that I'm using right now, and obviously let me just actually show you what kind of edge it brings as well. By the way, link will be in the video description if anyone wants to join the community. We're up to about 1400 plus members, as you can see over here. So I posted passing a 60k prop firm challenge. Now basically, obviously, I've always shown that if you've been watching my YouTube channel for a while, I always show passing small 10k accounts with the idea and sending the message: start small, don't invest in these 100k 200k accounts when you don't even have an edge. So I was just showing passing a lot of 10k accounts in the beginning of my channel. I used to show like passing 200k accounts, 100k accounts. So then until I got a message, why do you show, we can't afford the big accounts, can you please show passing these small accounts? So then I made many videos passing these small account videos, and until I got bored. So I thought, this time I'll show passing a 60k account. So I passed it within about 1.5 something days, something like that. I think it's about 2 days, 1.5 days, something like that. And then I get a message from the prop firm that this trade, particularly one over here, is invalid. Now obviously I take full responsibility for against the prop firm. The prop firm was 5%ers, number one or number two by far in the world. And if I show you the trades here, you can see, right, I'm catching like 1 to 7s, 1 to 9s, so a really good trading edge. So this is me just speaking to the support team, and they've just given me the reasons of this particular trade. So full transparency, right? That's what I'm showing. So what happens is, literally within a few hours after they removed this almost $2,000 trade. Now that's like 3.5% on a 60k account with this prop firm, right? Almost about 3.5%. I was risking 0.5% per trade as well, just to be clear. So the crazy thing was, with this particular trade, it was a 1 to 7 risk reward. If it was $3,000, then it's a 1 to 10 RR, but it's a 1 to 7 or almost 1 to 7 risk reward trade. So after a few hours, I said no problem, because I had belief in my edge, right? Within a few hours, I just made that same amount, and I passed the challenge. I did take out 2 free losses after that. Call it mental, a little bit of frustration, a little bit gutted, whatever you want to call it. Only small minor level percentage, because I still have that belief. I had that belief in my strategy, my ability to trade, and just experience, right? The experience. Come back, I passed the challenge, and that's when I posted. But before that, I posted this one here. This one here, right? 60k, 8% hit, excuse me. So obviously you can see this again, nice win rate. This was like 1 to 2.5. I was risking 300, but there's a particular reason I was only going for 1 to 2.5. This one was like a little bit 1 to 3. This one you can see here, 2 grand and 1500, 1 to 5 RR. But I mean, only cutting losses short when I knew that I had the trade. I wasn't liking it. But again, it comes down to my backtested data. That's where I'm getting my biggest confidence from, because every time I backtest my strategy, I know when I'm going to trade on random days, backtest on random days, because I've got, I've probably got about 500 days worth of data. So then eventually came a point when I would just scroll absolutely to the back, right, talking about 2-3 years back, pick a random day, and then start back testing on that particular day, and just to see and be profitable or lost, whatever it may be. But majority of the the data, it favored me. So that's one thing you can apply, right? Number two, my advice is psychologically, mentally, always just think when you're back testing that I'm starting off with 10% drawdown, right? You're starting off with 10% drawdown, and then when you start back testing, check out what your data is for that week. Now, when you obviously, when I say 10% drawdown, gather that the data for the week, and then see how your result is at the end of the week. If you're starting on for that particular day, then my advice is act like you've already in 1 or 2% drawdown, for then see what your data is at the end of the day. The reason why I say this is because suppose just trying to find where to just put myself to the side. The idea is, if you start already with a little bit of drawdown, and then you pull yourself out of drawdown and to edge, because people say, oh, what edge do you have? I also look at it as how good is your edge. It's not about what edge you have, right? Edge comes in different shapes and forms, but in this case, with levels, is it a very, very powerful edge, a very good decent edge, average edge, or just and in my eyes, what is a normal decent edge, right? A 1 to 2 risk to reward with a 50% win rate, decent edge. My edge is around 1 to 5 risk to reward, on average 1 to 5 risk to reward with around 50 to 60% win rate on a good when the markets are acting really good. But even if it's 30% win rate, right, it still makes me very, very profitable. Because why? If I win 3 traders out of 10 or 30 traders out of 100, let's just say call it 3 traders out of 10 with the 30% win rate, 5, 10, 15 minus the 7 losses, I'll still walk with around 8% profit. 8% on a 100k account is 8 grand, 16 grand on a 200k account, even on a 50k account, 60k account, whatever you want to call it, it's still a nice amount of money. So let's break some of these down. While I want to break some of these down as well, while I go on. Now, obviously, you gotta have enough sufficient amount of data, right? So I was speaking to my good old friend, ChatGPT, and I'm always asking him these questions. I will break these down, but I just want to quickly go over something as well. So I'm asking ChatGPT, how do I know if I've got enough data, right? Because there was a time, there's one particular strategy I remember, and it gave me like, I know it's absurd as it's going to sound. It's not the break and retest. Back then when I was, I'm talking about probably about a year ago, something like that, and probably about even 9 months ago, right? I was backtesting another kind of strategy, and obviously the break and retest is my bread and butter. But I mean, sometimes you get these moods where you start shifting into another strategy. I don't know, maybe you get bored of it, and trading, you will get it involves a lot of boredom as well. So I thought, I'll try something else as well, just to add in my portfolio into my arsenal. So this strategy now involves about 20 trades in a week. Sorry, 10 trades in a day, so around 50 trades in a week. So I'm asking ChatGPT, what do you think? And this is within, so it's about, I would say about 100 traders in a month, because you only have 20 trading days in a month, so exclude the weekends. I'm asking ChatGPT, do the days matter more, or do the setups matter more in terms of how much backtested data you've collected? So it was like, and the funny answer that I got from ChatGPT, and you can ask ChatGPT yourself, he said the setups matter more than the days, right? Which makes sense, obviously. But what's just as important as well is, just try out, because for one, let's say you're backtesting in, for example, July, right? And obviously the month of November, the December, you can have totally different results. So it's just as important to test out the months. But he came up with the answer that it's the setups are more important. Obviously, that along with like the rule based, you're staying away from the news. That's exactly what I do. So I was like, okay. Took that into consideration. Applied it to my break and retest. And obviously, recently I just refined it. And obviously, everyone who has got the course, whoever's got the the one-to-one mentorship from myself, I just made recent changes. By the way, also, if you are looking for a super affordable course, this price will be increasing. There's 12 super detailed videos that always get updated with webinars. You can, link them in the video description. Just a one-time lifetime access payment. Once in the future, if even 200 videos uploaded, this price, once you've got it, there's not future payments. right? But in the future I will be changing this price, just amount of value. Obviously you got, you know, you get what you pay for. So okay, so we can see obviously I marked out these zones here. Let's start breaking some of these traders down. Now clearly, let me just move myself here again. We are in a bearish push to the downside. Here we are in a bearish push to the upside, right? Again, upside, right? It is a no-brainer. If we're to the downside, you focus on sells. Upside, you focus on buys. Now, as we are focusing on the, you know, sells, obviously you can see all these positions here. Now some might say, well, you know, there might be some buying opportunities. Why don't you want to? Well, first of all, I would you know, say to what I would say to that is, do you want high probability setups, you know, or do you want low probability? I mean, you can get both, right? I mean, you can take buys and sells. So you'd rather show patience and go for high probability than show zero like patience and trade everything. Then you just have more chance of just messing things up. And by the way, do you know when the saying as it goes, if you trade more, you have more chances of losing and all that kind of stuff? No, I think of it as if you trade more, you're just more open to trading the less probability setups, right? If you trade more, just sort of make sure it's the high probability setups, but then they don't appear all the time. That's why they say trade less, because them high probability setups appear less. So anyways, okay, bearish, we are pushing down. So then we mark up our zones, right? Now you can see obviously push to the downside, create price can be a resistance, and now obviously, and look, how do I know this is the zone? If I can just keep taking this all the way back on price, I mean, look at that, respected, rejected, respected, however you want to look at it. Price breaks through, fake, however you want to call it, price comes back up, then it comes here again, right? I mean, even this obviously here opportunity, right? Just add it. And again, coming back to the point, when you're back testing, sometimes you chuck in those losses, right? And at the end of the day, if you're still profitable, right, then that's how you know. I mean, I can even see over here, let me just clone this, right? This would also be a winning trade. Clean breakout, price come down, reject, you will get the rejection, and boom, nicely hitting 1 to 7 risk rewards. Price breaks through. Would I sell from here? This is a bit too far for me, right? It still is, you know, by time price, I look at it like this. Price comes all the way down here. It's had so many hours of time to come back up. Buyers pushing the market back up. What if you just want to break through, right? That's why you have this little bit of consolidation, you know, a tug of war, a fight, you know, between buyers and sellers. Sellers eventually win, but this is not something I want to be a part of. I want to be a part of when there's a clear trend, strong breakouts, and then obviously, you know, going with the flow, going in the direction of the river. Very, very simple. So let's just break this down. So this trade loses, but this trade wins, right? Now, obviously, in this, sometimes it's going to happen. But what is the difference between this setup and this setup, right? Let me just tell you. Price is on this full force on the way down, right? But we're getting quite wick rejections. Wick rejections, if you get a wick rejection from the bottom side, just remember that that's buyers are sitting at these areas and pushing the candles higher, pushing the market up. If we get wicks at the top, that's just sellers pushing the market back down, right? When price comes down here, obviously we've still got a little bit of wicks on the bullish ones, like buying pressure coming in. This bearish candle is a very strong bearish candle. Hardly any wick at the bottom. Boom, falls through, right? Even though we've got some selling pressure at the top, we've got a bullish candle here. With this one, there's no bullish candle. Price just falls through. Obviously showing clear, you know, selling pressure. Go to a small time frame. I mean, look at the difference as well. Price falls through, comes back up to retest. Price bounces on the zone, bounces from the zone, and then falls through. Look at this. Let me just get this marker here. So we come down here, but we just created a, you know, a hump here, right? And then we fall through. Look at this one. We come down here, right? We fall through, and we're just coming back up to create the rejection. There's a difference. Even though, you know, this design that I've made, it looks pretty much similar anyway. But the idea is basically, you know, price comes down, Look at this. This hump here is created on top of the zone. This hump is created below the zone. Let me just like this. Look at that. Right? Above the zone, below the zone. Below the zone, the hump is a rejection. Above the zone is basically a rejection, but I mean, yeah, not the kind of thing that we're looking for. And the price just falls through. If I go to a much smaller time frame, see if we can get a clear. I mean, oh my god, look at this. Right? Look at that. You shouldn't even be thinking about an entry when you see something like this. Right? Let me just, but then again, add it to your backtested data. That, you know, add losses wherever you can find it. Even if it's like a 50-50 decision making question, right? Like, oh, would I have taken this loss if I was actually trading? Would I have actually done this? No, you're just lying to yourself. Or I would have done this differently on the live market. I would have done this, so on, so on, so on. No. If you got doubts, if you got questions like that, just make your loss, right? You want clean winners, you want clean winners, and only then you'll get real data. You want easy, simple, super clean winners, right? That you can take trades with your eyes closed, right? That there's no doubt. Like, look at this one here. There is no doubt, right? Boom, breaks through, price comes down, we're getting rejections. There is no reason why you should be taking a sell here. There is no reason why you shouldn't be taking a buy here. Look at this. Bullish rejection. Super strong bullish candle. Super strong bullish candle. Super strong bullish candle. Right? Three lined up together. I mean, this is like probably even an A+ setup. Very, very strong bullish candle. Take your entry after this one. Stops ideally below the zone. If you do have it below the wicks, you can obviously, ideally, you go to small time frames, and you might even find mini zones on the left here as support levels, which you can just use as a guide to take those entries, right? And still, if you go into the bigger time frame, how much are we gaining here? So I have made the stop loss a little bit bigger, and we're still easy, right? And this is all I'm doing on a day-to-day basis. Obviously, this is not the exact same, the edge that I provide in my mentorship and the one-to-one, course. The one-to-one mentorship, or the course. The edge obviously is, again, you pay. You gotta obviously, you get what you pay for. And I've made it pretty much affordable as well, because I know the average person works at 9 to 5. So I've still made it because I want, anyone that comes in the mentorship, anyone that, just to where you can get consistent payouts. And that's the whole idea, right? But yeah, I hope so. Basically, it's just number one, start with the mental drawdown of 10% and see for the week, are you able to pull yourself out. Number two, start trading, backtesting from a random day, pull out a random day and just see if your setups will work on that particular day. And obviously, have a long conversation with ChatGPT. Trust me, you'll be surprised with what ChatGPT gives you. The kind of ideas ChatGPT will give you ideas that you didn't never even thought of. Trust me, you'll get to ask questions that you didn't even know to ask. Yeah, so I hope you found value from this. Leave a like, comment, subscribe, share. Take care. I'm out.